It's and a lot more. We're pleased to welcome back to Post 9 Pulitzer Prize-winning New York Times columnist Jim Stewart, who hasn't been on the desk in a while. It's great to have you back.
Nice to be here. Nice to be here.
You make the point that the idea that the meme traders were going to be washed out for good was overstated.
Oh, like totally. I think so many of us, including me, like kind of misunderstood this from the beginning as some kind of at least somewhat rational investment strategy that people would lose money, and then as rational beings, they would go away and stop doing this. But nothing like that has happened. I think it's here to stay. It's not really investing. I think it's more entertainment. You compared it to chess. I think that's probably chess masters would take affront at that, because I don't think you have to be as skilled as chess. But it is a game to these people. A lot of what I know about it comes from my students at Columbia. They're like super into all of this. And they say, oh, forget about it. It's not investing. It's like, first of all, there's a social media component. You've got to kind of live on the internet and the chat rooms. And, that's all part of the entertainment. And then the big excitement comes, like the big game comes when they pile on to something. And there is maybe some kind of weird logic to it, which includes following, it used to be Roaring Kitty, who kind of disappeared. Ryan Cohen is
remember Roaring Kitty?
Remember
right?
Roaring Kitty?
Of course, right?
Ryan Cohen is now one of the big stars of this, and they all follow it. And the excitement is the run up and then the run down. And sometimes they make a little money and sometimes they lose some, but it's the thrill, it's the excitement. It's like thumbing your nose at the establishment.
Right.
And then they're on waiting for the next one. And another one will come around.
But, now, Jim, you've done a lot of work on the regulatory side of things. So there are plenty of old-timers who find this unsettling, to say the least, and undermining the integrity of the market to some extent, although there's plenty of other things we could point to. Is there any role for the SEC to play here at all? Is there anything? Ryan Cohen was not an insider, even though he did have 3 directors on the board at his behest, so to speak, as an activist. It's not clear that there's any manipulation that at least would fall under that category where the SEC would really have some ability to do something, but I'll ask you as well.
The SEC did look into the phenomenon, and Congress held hearings, and Roaring Kitty actually testified, and nothing really came out of that. So I think, no. I mean, yes, of course they have to make sure that the laws are followed, but it's nothing new in the markets really to have these sort of people who have an outsized influence who people follow. I mean, there are people who've been tracking Warren Buffett's every move for years. And, I think it is unsettling to traditional investors that a Ryan Cohen, who must know that he has a certain impact on the market, can factor that in, and then he takes a public position and boom, things go up, and then he sells. I mean, I guess, you can't say that's illegal, but it is unsettling to real investors.
Yeah, speaking kind of just education and regulation, I think it was Jay Clayton on Squawk Box this morning talking about it is the SEC's mission to educate. Well, the filings that came out this week were very confusing to retail investors. You had that Form 144, which said it was a kind of a proposed option to sell. Those in the know realize that this is something that usually when these things are filed, it means they have sold.
Selling has already taken place when the 144 comes out.
But if you're a retail investor and you read the language of these filings, it's very confusing. Same thing with the options from earlier this week. It appeared that it was, a new event that took place on April 21st. Didn't make it clear that that event had to do with buybacks, changing the denominator of the number of shares outstanding and therefore increasing the size of his stake. And so I just wonder if regulators should be doing a better job in kind of making this more transparent and digestible for retail investors, since they are so involved.
Well, I think there's no question there's a lot of room for improvement there. But I think it's revealing that Ryan Cohen made the filing, and the meme crowd apparently didn't even notice it. I mean, again, a lot of my students have interviewed a lot of these people, and I don't think most of them know what an SEC filing is. They've never read one. They don't know what a PE is. I mean, they're on another planet when it comes to what information they process and then act upon. And I do think that there's a silver lining. Some of them get interested and are actually now starting to learn something about the market. That, it is not just a pure game. It's not just gambling. There are ways to make, money, and maybe as they're getting older and a little wiser, they're going to become, more educated investors. That's the possible
hope, right?
silver lining here.
You would think that if the idea is to win, that you'd want some edge, and that maybe learning what a PE is could be helpful.
Exactly. And also, I think, some people have said, this is like destroying the whole idea of an efficient market, because there's nothing efficient about their thinking. But there are not really that many of them. I mean, the occasional meme burst, I don't think it's not moving the overall PE of the market. I don't think it is actually damaging the ability of the market to reflect realistic values.
Well, that was one thing that was mentioned today. You got BBBY down 40 pre-market, and equities were in a normal range, right? You think overall the market can absorb whatever erratic behavior they present?
I mean, the market is so big and so liquid, and I think for people, anybody over 30, my advice would be just it's entertaining to see what happens, but just ignore that. I mean, don't even dream of trying to wade into this.
To actually play it, yeah. Although, again, they are all very similar situations in that they are all typically in companies that have deteriorating fundamentals, where there are real questions about the viability of the business. I mean, GameStop, of course, and we sat there talking about all the analysts out there with single-digit price targets. Didn't matter. AMC, same, and Bed Bath & Beyond as well.
Contrarians have long looked for that kind of stock. I mean, the upside potential of something that looks horrible and is heavily shorted, if you hit it, is enormous. So there is this kind of potential for an outsized gain, but it seems to me like it's a unicorn. They happen very, very rarely. I mean, there are reasons why Bed Bath & Beyond is teetering on bankruptcy.